Hello, today is Tuesday, August 4th, 2026. Here is your daily signal. According to Bloomberg, major Indian companies are signaling fresh price hikes after June's inflation data showed consumer prices rising above the Reserve Bank of India's 4% target for the first time in nearly a year and a half. India's headline CPI inflation rose to 4.38% in June 2026, with food, especially vegetables and milk and fuel costs driving this increase, while the wholesale price index had already shot up to 8.3% in April, highlighting supply-side cost pressures. Producer price pressures have passed swiftly to retail outlets, but monetary policy is limited in tackling these cost shocks because it mostly influences demand, not the global events or harvest disruptions that led to such spikes. The RBI's Monetary Policy Committee, led by Governor Sanjay Malhotra, kept the policy rate at 5.25% during their June 3-5 meeting, projecting annual inflation at 5.1%, with Malhotra warning that geopolitical friction could send consumer inflation close to 6% in the October-December quarter. In the very near term, if price hikes persist, household budgets could be strained and real consumption might soften. Should these pressures remain into late 2026, the RBI may be forced to consider raising rates, despite earlier intentions to pause. Further margin squeezes for producers could result in even wider price transmission, escalating risks of entrenched inflation expectations, and if those expectations break away from targets, fiscal and monetary coordination will face bigger challenges ahead. Turning to Singapore-based Brillia Incorporated's latest business update, Associated Press reports that Brillia NYSE American, Bria posted fiscal year 2026 results reflecting the impact of global supply chain disruptions and tariff shocks, but also signs of a rebound. Brillia specializes in ladies' intimate apparel, managing over 30 brands like Diana and Jockey Indonesia and providing integrated services in sourcing and logistics. For FY 2026, the company produced $49 million in revenue to March 31, 2026, with a debt-free balance sheet and positive operating cash flow, returning $3.3 million in dividends and earning a gross profit of $7.0 million, or a 14.3% margin. CEO Kendra Hartanto leads these efforts, working with partners across Asia, North America, and particularly through alliances like HH4K Group and brands such as Ai Sakura. Financial discipline allowed Brillia to weather order cancellations, and the brand portfolio investment continues to expand. Noteworthy, Q1 FY 2027 revenue grew 13% year-on-year. Management expects Q2 revenue to jump 30% as the sales pipeline strengthens, and the company just published detailed earnings on July 31, 2026. If present trends continue, Brillia could achieve double-digit growth for the year. However, global tariffs and supply chain volatility pose ongoing risks to volume and margins. Consistent dividends and prudent cash flow bolster shareholder value, but sustainable performance will demand further strategic diversification and successful execution of new partnerships. Next, a look at how open source AI is upending business models across the technology sector. As described in Next Big Future, when widely accessible AI models reach parity with paid, proprietary systems, the core value in the AI industry migrates away from selling access to the models themselves. Open source AI, including high-performing models like Meta's Llama 3 and emerging competitors from Mistral AI, has transformed the competitive landscape since 2023. Unlike traditional approaches by companies like OpenAI, Google, or Microsoft that depend on closed, paid algorithms, open models are freely available to use, adapt, and distribute. Meta has led this shift by releasing Llama 2 and 3, spurring broader adoption and inter-company competition. On August 4, 2026, Mistral AI announced a partnership with SAP to integrate open-source AI across enterprise operations, and Meta unveiled enhanced Llama 3 capabilities. According to a report in The Information, revenue growth has slowed for proprietary AI cloud services as corporate buyers pivot to open models. In this climate, costs for enterprise AI are set to drop as businesses exchange expensive licenses for freely available alternatives, and legacy tech players may be forced to compete on vertical integration or distinct services. We are likely to see more venture funding flow toward firms building solutions atop open-source stacks and away from closed platforms. Over time, innovation is expected to accelerate as open access drives faster experimentation, even as regulatory or intellectual property issues grow more complex. Now, onto the markets. International equities rose moderately, led by Italy's EWI, up 1.31% on the day, while Germany, tracked by EWG and EWD, also gained with EWD up 1.81%. France's EWQ and the UK's EWU each posted modest advances, with top gainer momentum seen in Italy and Germany, and no notable losers among major European funds. Commodities were mixed. Gold GLD climbed 0.66%, and silver SLV surged 2.63%, while US oil USO fell sharply by 5.19%. Agriculture ETFs such as DBA edged slightly lower, while platinum PPLT shined as the best-performing metal, jumping 6.64%. In favorites, Adobe bet advanced 2.45% and Microsoft MSFT added 1.06%, while AMD soared 7.0% on the day. Amazon slipped 2.32%, marking the group's main decline, as ARM skyrocketed 17% and Intel Inc. jumped 10.8%, both standout gainers. For sectors, the S&P 500 SPY gained 1.8%, led by strong performance in semiconductor stocks up 6.8%, and transportation XTN, which climbed 3.0%. Healthcare Roman 45 was flat, real estate XLRE edged fractionally lower, and clean energy QCLN outperformed with a 3.6% rise. Among individual movers, Autonomics Medical Amex surged over 300% as today's top gainer, while Next Technology Holding NXTT plunged 73%, leading the day's losers. That's it for today. You can find more news and details on our website. Goodbye.